Hey everyone, welcome back. Today we're diving deep into something massive: why global market volatility, tariffs, and economic uncertainty are actually huge tailwinds for Bitcoin. Yeah, you heard that right. What looks like chaos on the surface, it's paving the way for something powerful underneath. Let's get into it. As I'm recording this, it's April 7th, 6 p.m. Eastern, and Bitcoin is sitting at around $79,400. Just under the $80,000 mark. We're down about 27% from the all-time high of $109,000. But don't let that number fool you, because today I'm making the case that the current macro environment, it's setting Bitcoin up for a breakout. The US just announced new tariffs. Global trade policies are shifting fast. The world we knew post-World War II, where the US imports goods and exports dollars, is being flipped on its head. These tariffs signal a shift away from globalization. Countries that once profited by sending goods to the US are now being told, pay a toll if you want access to our market. That's a major shakeup. And the message is clear: the US is trying to fix its trade deficits and bring manufacturing jobs back home. Here's what most people miss. When countries export goods to the US, they receive dollars in return. But they don't want to strengthen their local currency by converting those dollars. They want to stay competitive. So what do? They recycle those dollars into US assets, mostly treasuries and stocks. That's why the US stock market has been so elevated. Not because everything is magically better here, but because of a flood of foreign capital reinvesting those trade surpluses. Now imagine if that money stops flowing. Imagine if these countries no longer have a surplus. What happens? They stop buying our stocks, they dump treasuries. That's exactly what we're beginning to see. So the US wants to fix deficits, reindustrialize, and reduce dependence on foreign supply chains. Fine, but that means less global capital buying US debt and assets. So, who's going to step in? The answer: the Federal Reserve, US banks, and eventually massive money printing. Because if global capital is leaving, the US has to fill the hole. And how do you do that? You print. And what happens when you print? You devalue your currency. That's where Bitcoin comes in. In a world where governments must debase their currency just to keep the system afloat, scarce assets become king. Bitcoin is the most portable, divisible, secure, and neutral store of value humanity has ever created. It's programmable money that no one can inflate, no one can seize, no one can corrupt. As more fiat floods the system, Bitcoin becomes the life raft. We're not talking about speculation. We're talking about structural demand, about sovereigns, institutions, and individuals looking for a better store of value. The Federal Reserve has already hinted at what's coming, slowing down quantitative tightening, floating the idea of QE again. Treasury officials are discussing changing banking regulations to allow infinite purchases of US debt. This is not speculation. These are the chess moves being made in real time. Expect the banks to step in, expect easing to return, expect liquidity, lots of it. And that liquidity, it's rocket fuel for Bitcoin. Stocks are likely to get hit hard. If foreign nations start dumping US stocks and stop reinvesting trade profits, the stock market loses its biggest buyer. The game of buy tech stocks with surplus dollars starts unwinding. Multiples will compress. Companies will be repriced. But Bitcoin, it doesn't rely on corporate earnings. It doesn't need dividend payouts or PE ratios. Bitcoin thrives when trust in fiat crumbles. It's not just a hedge, it's an escape hatch. So here's what I'd recommend. Stay humble. Stack sats. Live within your means. Don't use leverage. Focus on creating value and building something real. Volatility? It's part of the game. Let the stock market freak out. Let others panic. But know what you own. Know where this is going. Because the path is clear. More debt, more printing, weaker dollar, stronger Bitcoin. We are living through the restructuring of the global economic order. It's uncomfortable. It's volatile. But it's also a moment of opportunity. Bitcoin is not a tech stock. It's not a bet. It's a necessity. So take a deep breath. Stay focused. And remember, in the long run, scarcity always wins. If this resonated with you, share it. Comment below. Let me know what you're stacking, what you're watching, and how you're preparing. And if you're new here, subscribe for more weekly insights on Bitcoin, macro trends, and the future of money. Take care, stack strong, stay free.